So there's now growing evidence that the cyclical bottom for Micron technology is behind it. Looking ahead, its prospects look excellent, and its recently completed quarter, the company's revenue and profitability absolutely soar. So in this video, I wanted to highlight a couple of markets where Micron sees growing demand, including the PC market and the computer market and mobile device market. And then I wanted to move on to its outlook for its next fiscal year and what it's expecting to deliver for investors in its fiscal year 2025. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Right, so Micron saying that PC unit volumes remain on track to grow in the low single-digit range for 2024, but they expect unit growth to continue in 2025 and accelerate into the second half of calendar 2025 as the PC cycle gathers momentum with the rollout of next-gen AI PCs, the end of support for Windows 10, and the launch of Windows 12. Now, I've been talking about this for several quarters now, how the personal computer market is about to enter the strongest replacement cycle, arguably in its history, because of these factors coming in. The next-gen AI PCs, the end of support for Windows 10, and the vast number of computers that were purchased in 2020 and 2021 when people were working from home, learning from home, entertaining from home, etc. Those computers are entering the phase where they need to be replaced. Right? The average computer lasts 4 to 6 years, and depending on your use case, you can use it for longer or shorter. If you're using it more intensely, then you're using it for a shorter amount of time. If you're using it less intensely, just for browsing the internet and answering emails, you can use it for longer than that. But it's entering the phase where those computers, 4 to 6 years, they were purchased in 2020, 2021. That's a big replacement cycle coming due. And Micron expecting the accelerating growth in this market in the back half of next year. Now, on top of that, AI PCs require a higher capacity of memory and storage. So not only are more PC units going to be purchased, but each unit is going to need more storage and more memory. So that's going to drive further demand for Micron Technology's products because of that increase in components in each computer. The average gigabyte of computers in 2024, the gigabytes of DRAM was around 12 gigabytes of DRAM, but these new AI PCs, the minimum is going to be 16 gigabytes of DRAM. And then if you want better performance, you need more gigabytes of DRAM to get better performance out of those personal computers. So that's driving robust demand for Micron next year and the year after that. It's a similar story for mobile devices. Smartphone unit volumes in 2024 are on track to grow low to mid single digits, and they expect that unit growth to continue in 2025. So recently, the company leading Android smartphone OEMs have announced AI-enabled smartphones with 12 to 16 gigabytes of DRAM versus an average of 8 gigabytes of DRAM in flagship phones last year. So similar story, right? You're having that replacement cycle, and not only is that replacement cycle going to increase the unit volume, more units sold, but it's also going to increase because those each individual units need a higher components inside, more gigabytes of DRAM, more storage than they were used to the prior year, because now these phones are going to be enabled with artificial intelligence, which requires more gigabytes of DRAM to utilize all those features. So that's another feature for Micron Technology, similar to the personal computer market, where overall these markets are mostly saturated, right? You're not seeing big growth in new customers in these categories that I mentioned, mobile and PC, but what you're seeing is existing customers upgrading, the upgrade cycle, the replacement cycle, and the replacement cycle being enhanced because of artificial intelligence. The automotive market is an interesting one as well. The infotainment and advanced driver assistance systems are driving long-term memory and storage content growth. For the fourth consecutive year, Micron achieved fiscal year record for automotive revenue in 2024. Now, this is for you bulls that expect Tesla to deliver, let's say, driverless car technology, or a number of these automotive companies to deliver driverless car technology, or incrementally improve the driver assistance systems, Micron technology will benefit from that growth. So rather than trying to pick and choose one automotive company that's going to win in this driverless car technology, you can go with some of the component companies like Micron that will benefit from the growth of cars being enabled with more assistance technology. Even if it's not full driverless technology, even if it's just like parking assistance, more parking assistance, or more emergency braking assistance, or more lane assistance, lane changing assistance. Whatever those assistance features are, companies like Micron will benefit. And we're starting to see data. Now, this is really early stages, but I'm starting to see data where these driver assistance systems, especially the emergency braking and these other systems, are helping to improve safety. And that's really a big feature, is the safety enhancements from these assistant driving systems. Not just the being able to take a nap while your car drives you around, but the increase in safety because of these advanced driver assistance systems. I think that's really going to drive growth in this industry. As you know, a customer might say, if I buy this car that has this ADAS system, my insurance premium is lower. So it makes sense for me to buy this car with this system installed because that will drive down my insurance cost. And of course, it's safer. And so I want to be in a safer car to begin with. So that's going to drive growth for Micron as well as the industry. Now, looking ahead, the calendar year 2024, DRAM industry demand market outlook has improved, driven by strength in data center servers, and growth in the other market segments has performed consistent with their prior market commentary. For Micron, what they were expecting in 2024 was a certain amount of demand for the market for DRAM. That's better than expected. That's turning out better than expected because the data center server segment is outperforming much better than they thought. So that's driving an upgraded outlook for 2024 for Micron Technology's DRAM outlook. And for NAND bit demand growth or storage, they expect mid-teens percentage, 14%, 15%, or 16% growth in storage. And in 2025, they expect both DRAM, which is memory, and NAND, which is storage, growth to be around the mid-teens percentage range. That's really great news for Micron. They expect 14, 15, 16% demand growth for memory and storage. That's for the entire market. And if the entire market is growing at that robust rate, then Micron will grow as a result of the growth in the market, so long as they don't lose market share, which they are not. They forecast to increase market share, and so their forecasts for revenue and profitability are increasing for 2025 because the market's growing at mid-double digits, and Micron expects to gain market share, so you can start to see how they're so optimistic about 2025. And then the other side of the equation looks good for them too, the supply side. So due to some CapEx and supply reduction actions taken across the industry in 2023, they expect capacity for storage and memory in 2024 to be below 2022 levels. So supply is below 2022 levels, but demand is much higher. And so you have that dynamic, if you remember from Econ 101, supply and demand. When demand is increasing and supply is decreasing, that means price is increasing, and Micron is the one that's charging the price. So that's great news for Micron. They also expect a healthy supply level for storage in 2025, and Micron saying that they're going to moderate capital investment over time to align supply with demand, and that's going to reduce investments in research and development and capital intensity in storage over time. That's good news because capital investments has been a concern with many investors, and even in 2025, it's going to be strong. The company's saying they spent $8 billion in CapEx in 2024. In 2025, they expect it to be meaningfully higher at about 35% of revenue, and that's going to be because of growth in new fab construction and high bandwidth memory CapEx investments. Construction in its new Idaho and New York facilities will support their long-term demand outlook for memory, and it won't contribute to supply in 2025 or 2026. So the earliest 2027 is when they'll see supply from that New York and Idaho facilities that they're constructing right now. So they do expect to increase their CapEx in 2024. But the good news with Micron, unlike Intel, which I've highlighted, Micron's cash flow from operations are very large, enough to support those capital investments and still generate free cash flow on top of that. Whereas Intel, its operating cash flow is so low that the capital expenditures, it's not enough to cover anywhere near that level. So it's really burning through a lot of cash. That's not the case for Micron. Some investors were concerned about these capital expenditures for Micron. That's why you saw the stock price dip in the middle part of this year, is because of these large capital expenditures. But I think these are prudent capital expenditures from the management team. This isn't going too far. This isn't extending themselves too much. I think management sees robust demand, as they highlighted, for their end markets, and they're investing to capitalize on that demand. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.